Hey guys, Stockaholics, thanks for being here today. Recently, I've decided to purchase some shares in this company, OTC Markets, which I'll be talking about today. And if the price goes down, I may purchase a little bit more. um, if you guys don't know, OTC stands for over the counter. So what I could best describe this business as is it's a company that largely manages OTC stocks, but I'll go over what their business is and how they make money a little bit later in this video. I think that this business is an incredible business, and I think that it is likely to outperform the market in the long run. So I'll be sharing my thoughts around that and why in this video. Okay, 5 reasons why I'm buying OTC markets. They're highly profitable. They have a unique high moat business. There is high insider ownership, tells me that incentives are aligned with shareholders. There is likely to be, in my opinion, some long-term tailwinds for this company. And the last one I should predicate, it is not super expensive. If you find this information useful in this video, consider liking. And if you'd like to see more content like this, consider subscribing. All right, so the earnings and the revenue in this company has just been absolutely pristine over the last several years. They've been growing, I believe, at a rate of about 11 or 12% per year. And last year they earned 29% profit margin on on their revenue. So that means for every dollar in revenue, they're earning about 29 cents of profit. They are a relatively small company, so they are what I would either consider to be a small cap or a micro cap, depending on how you see that. I wanted to show you guys some of the operating metrics from this company. This was taken from Morningstar. Return on assets. This company is relatively asset light. I actually kind of see them as a technology company. And if you look at some of these numbers, I think that might make a lot of sense in a second. But ROA, they have very high double-digit numbers across the board. Return on equity. We've gone from 30% to over 100% in some years in the last several years. ROIC, another one, just massively growing. And these margins that I was talking a little bit on that last slide, they've just been outstanding margins. We're looking at about 30% average operating margin across the last 6 or 7 years, right? And actually, they've had so much income that I believe they've paid some special dividends, and they also have a very small recurring dividend at this time as well. Okay, so how is this business so profitable? This is the OTC Markets business overview. I'm going to do my best to explain this company's business, okay? I think their core business is that they're a trading platform that allows companies not listed on a US exchange to trade. So there's the New York Stock Exchange. All of the companies that are listed on the OTC market will not be listed there, okay? So it's basically all the companies that either not willing or unable to list on the New York Stock Exchange, okay? It gives US investors access to both domestic and foreign markets, both small and large, through broker dealers. So I don't know that it's really an exchange. It's kind of just connecting different brokerages out there and allowing these OTC stocks to trade between them, okay? And there's 3 tiers of companies listed with the OTC. There is the not shady, so this would be the OTCQX. These would be some very successful companies. They have high reporting standards. They're basically like the best of the best foreign kind of stocks. They may be very successful in their own home country exchanges, but for whatever reason, they're not listed in the United States. And these ones are incredible companies, okay? And I kind of describe these, by the way, as not shady. When we get down to some of these other tiers of companies that are listed on the OTC exchange, the OTCQB, these ones are sort of shady. They have some financial reporting standards, but not nearly the same level as these ones. And then we get to the pink sheets, and I would describe these companies as very, very shady. They may have no income, they may have no reporting standards, kind of like a lot of SPACs that we're seeing today. Yeah. But I think that this is actually one of the bigger risks for this company, and I'm going to describe that a little bit later. Okay, so how does OTCM make money? So these are the three categories that are listed on their balance sheets, how they describe their different services. The first one is corporate services. So I just mentioned those three types of categories of companies that can list with OTC. And what they do is they offer them these services. These are startup fees they charge to these companies in order to trade on OTCM's networks. According to their last balance sheet, it was approximately 30% of their overall revenue for this company. Second way this company makes money is through what they call market data licensing. So all of these brokers where these companies are trading, they have to have certain regulatory compliance, and then they pay OTC a subscription service. This is a recurring revenue for some of this data to make sure that they're regulatory compliant. And this is also approximately 30% of revenue for this company at present, but this is a recurring revenue stream, which is one of those other things that I like to see in some good businesses, right? The last thing that the last way that this company makes money is through what they describe as OTC Link. So what this is another subscription services where brokers pay subscription fees to OTCM to have access to data, to real-time data on all of these companies that are listed with OTC, and it communicates with each other. So this is kind of like the infrastructure that makes trading all these things possible. And this is between the different brokers. And this is approximately 40% of their overall revenues. And it's recurring as well. There is a very high level of insider ownership in this company. Approximately 43% of shares are held by insiders. 36% of those are held by the CEO, Robert Coulson. And then we have varying percentages in the single digits of various board members and other participants within the company. Charlie Munger is famous for one of these quotes. He identifies himself as being in the top about 95% or so of people who can successfully identify outcomes when you give him an incentive, right? So one of his famous quotes is that he show me the incentive and I will show you the outcome, right? So if we know that there is a very high level of insider ownership, we know that our interests are aligned with the people who are managing the company. If the company does well, we will all do well. If the company does poorly, we will all do poorly. The incentives here show that there's an increasing likelihood that the company will succeed because these people's wealth is tied to the success of the company. When I research a company, I also like to get to know the management a little bit, to get a feeling for them, is to also look at some of their past to kind of, I guess, make an estimate of where their future and what they can do with the company looks like. The CEO again is Cromwell Coulson, and he's been with this company for a long time. There were a few predecessors to this company, but this guy's been with the business since 1997, and he's been the leader of the company for a very long period of time as well. I went around the internet to see if I can find any dirt on this guy, and I haven't. He is pristine in terms of this, and he seems like he has a high level of, I don't know, ethics based on what I can see on the internet. I went on his Twitter and I saw this and I thought this was really cool. And he suggested to read Benjamin Graham for knowledge, The Intelligent Investor, and to read Jesse Livermore for entertainment. So he may have some strong opinions on some different things. I share this kind of mindset, by the way. I don't think trading is a very successful long-term strategy for most people, but I think that he has a character, and I think that the ethics and whatever are aligned with the interests of the company. If you guys know anything about me, I can obsess over macro kind of stuff. I think a lot about that, those kinds of ideas. This, what I'm about to show you guys is, I think, kind of a trend that we've been noticing with my generation, with millennials. So last year, this person, we'll call this person Brittany, he or she first got involved in investing when, like many millennials in the United States, during the cerveza sickness lockdowns in the beginning of last year. So this is a conversation with this person I took from Discord. Question: yeah, are you going to get back into stocks? And if you do, will you trade again or buy and hold? So I was curious. This person went bankrupt doing what I believe I would define as risky swing trading strategies. And they responded, "What do you think?" I said, "I think you will." Yes. This person responded with a new strategy that they will likely be implementing in the future. 25% allocation to the S&P, 25% to the NASDAQ, 25% to medium risk 1-year ETFs, and 25% with single stock swing trading. I think this is evidence of increasing sophistication with a lot of investors. And why do I think that's important? And this is an anecdote, it's not necessarily a widespread evidence of this, but to get involved in the OTC market, you kind of have to have, in my opinion, a higher than average sophistication. You kind of have to want to do it. You have to seek out companies outside of your own country. You have to get over home country bias, which a lot of people have. But I think the likelihood of that happening with my generation, especially when we think about how connected we are in terms of different people around the world with technology, I think the likelihood that an increase in my generation purchasing OTC stocks compared to generations prior is pretty likely if we assume that my generation will become increasingly sophisticated. I wanted to show you this article. I'm not going to read through the whole thing, but just to kind of emphasize my point on that last slide I was showing you guys. This is an article from the Business Wire entitled "The Rise of the Investor Generation. 15% of U.S. stock market investors got their start in 2020. There were a lot of investors, just like my friend, and there's been a tremendous amount of brokerages openings. If you look at Robinhood, you look at Schwab, Fidelity, any of these guys that share that information, there's just been a huge spike in investors. I think a lot of these people may not be long-term investors, but I think that the majority of them will be. Like my friend, some of those people will blow up and will give up. But I wanted to show you this to kind of emphasize why I think a lot of them will continue. And this is a chart. This is a survey they took. More than half of, this is from 1,000 respondents, more than half of Gen I members, so these are the people who first started a year ago, say they will save more once the pandemic subsides. 43% say they plan to invest more, and 42% plan to work on reducing their total debt. When it comes to their investing strategy, Gen I says the biggest surprise during their first year of investing was learning that investing is more about long-term gains than short-term wins. And shifts in their investing approach reflect this is a generation of learners. You can see when these guys first started, this is just a survey, but what they intend to do, and there's an increasing amount of these people who are looking to go towards a long-term investing strategy instead of a short-term investment strategy. What this demonstrates to me is, again, that increasing sophistication. And if we know that they're becoming increasingly sophisticated, the chance that a percentage of these people go to the OTC market increases the amount of money there and increases the amount of interest between all of the parties that get involved to do business with the OTC market. Therefore, I think that the chance that this company makes increasing amounts of money over time is fairly likely. All right, so that leads us to valuations. You guys remember I said this company isn't super expensive. Right? But I think a lot of value investors may have some difficulty with investing here when we look at some of these metrics, okay? The PE for this company trading right now is approximately 23. And according to this was taken from Fidelity, by the way, they are in some of the higher percentiles in terms of their PE ratio in the capital markets industry. I kind of wonder if this capital markets tab here is including markets around the world, or if it's just from US markets. Because I looked at the NASDAQ, the company, in terms of their PE and in terms of some other metrics. And I also looked at a similar company, Morningstar, and their valuations are much, much higher than this. Just something to keep in mind. But another thing to keep in mind, I think that's important, is that I see this company largely as a growth company, right? So, you know, 23 might be difficult for a lot of value investors. For me, I think it's okay for the type of company that we are talking about, right? Price to cash flow, sits on those upper echelons, right? 17. I know a lot of value investors probably look for some much lower ones, maybe 10 or so, somewhere around there. Price to cash flow, 21, right? I did and by the way, there's some of these that look really bad price to book. This company doesn't own a lot of assets, okay? So for this 22, I don't think that it's kind of the most fair metric. I think it's more important to evaluate this company like a technology company in terms of cash flow, right? I did a DCF model. I was playing with some calculators, and depending on how you see the growth rate going over the next continuing into the future, I found there's a fair value range somewhere between $35 and $45 per share. I think probably the fair value right now is around $40, and that's what I've listed here. But if you're looking for a high level, a high margin of safety, which like I know a lot of value investors do, you probably won't find it at these current price levels. For myself, if this company does get much cheaper, I know that I'm going to buy more. I think there is some risks with this company, like all investing, by the way. I think there is a slight degree of cyclicality in this company. I wouldn't focus too much on that. I think is based on the business cycle. What I mean by that is that when investors have higher than average incomes, they may invest more money, like we saw in the United States in the last year. When the economy is doing poorly, people have less money, they may invest less money. And that may lead to all of those tiers that this company earns money from, for some of those entities to become less interested in becoming involved in the OTC kind of exchanges kind of thing, right? But I think the biggest risk for this company is actually one of their investment tiers. That is the pink OTC markets, right? If you guys don't know, these guys don't report very much financial information, and they are prone to fraud. There's a lot of shady stuff that can go on here. There's a lot of pump and dumps that happen in this space too. There's a lot. It's in many cases is no bueno. Yeah. Recently, what we saw with the SEC is that they have been actually going after some SPACs, if I recall. If last year, a lot of these SPACs, in my opinion, would be much like this one, where they have no revenue. They're avoiding direct listing because they wanted to avoid all of the paperwork and avoid the harsh reporting standards in the past. But the SEC is starting to come after these things, and I think that the likelihood that at some point in the future some kind of new regulation comes along, especially targeting these pink sheets, is pretty likely. Okay. Now, it is important to keep in mind that this market is only a fraction of the overall business, right? We might assume that if the worst case scenario, the SEC says, hey, nobody can trade in the pink market anymore, which is probably also pretty unlikely. But in worst case scenario, maybe that would affect the bottom line of this company, I don't know, 10 or 20%, okay? But I think it's an important risk worth noting, and there you go. But hey, that's why I'm investing in this company. But I'd be curious to hear your thoughts. What do you think about this company? Is it too expensive? Is there anything you think I missed in the company? Be happy to hear it. Let me know in the comments below. Hope you guys found this information useful. If you did, please consider again liking this video, and I will see you guys soon.